Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Hump Day, and it's April 13th. We got a bit of economic news to jump over today, so we're going to get right into it. We'll start off with the retail sales for the month of March. So previous month in February, it was zero, so basically nil. Supposed to have a slight increase in March, but unfortunately, actually went backwards. We had a contraction of negative 0.3%. Now, if you strip out the big ticket items like autos, we got the core sales. So again, we had zero in February, and it was supposed to go up 0.5% in March. It did go up, but only shy of expectations at 0.2%. Now, for producer price index, also known as the PPI, this is the wholesale inflationary number. So inflation on the wholesale level of things. It's a gauge we kind of look at, but it's not extremely important, primarily because we're looking at on the consumer level, and sometimes if prices go up on wholesale level, it doesn't always get passed on to the consumer. So this is kind of more of a medium report. So the month of February, we had a contraction of 0.2%. So we're expected to go up to 0.3% in March, but it actually, again, contracted again, another month of contraction at negative 0.1%. Now, if you strip out the volatility of food and energy, we had zero in the month of February, and we were supposed to climb again in March, but again, base is zero. So really no inflation numbers in the wholesale level. We're trying to get inflation go upwards, at least at the consumer level, which it looks like it's kind of gradually going, but again, it's still going at a very slow pace here. Now, another gauge we can kind of get an idea as to maybe a potential increase for businesses and jobs is the business inventories. And January had a 0.1% increase, but February it basically came in expectations at negative 0.1% in February. So they're not doing a whole lot in February, obviously. So we'll see if they kind of gear up later in the year here. And then later today, we're expected to get the Fed's Beige Book, which could change the markets. You know, it basically gives them the Fed's perspective of where the economy is at and all the different data that they're looking at. So, but however, on this morning, the stock market is up. A lot of it has to do with not so much on the data, but Chinese exports. They kind of got excited, but again, it's in the month of March. It was after the Lunar New Year in February, so it jumped up a bit. And again, something that probably won't be sustained. It's good news, obviously, but probably won't be as sustained. So it might be markets might be a little bit overreacting on it, especially when the markets like yesterday went up. When the oil jumped up about 42 bucks, we went up. Yesterday we were about 40 bucks in the morning, and it jumped to like 42 bucks, up about 5% one day. Now it's down about 41 bucks so far this morning. And right now they're kind of disregarding it, but if that continues, you'll probably see the stock market change directions, as the stock market since the beginning of the year basically has been dictated by the price of oil. Now, yesterday what kind of geared that up was that there's a meeting among the large oil-producing countries, and they thought maybe they might be able to come to a resolution with cutbacks on the oil production. So that's what it was based on speculation why the stock market rallied a bit yesterday, and the bond market kind of tanked a little bit yesterday, which you'll see here in a minute. As you can see, we had a price for the worst. We closed down about 19 basis points. So far, we're right about zero, or about where we left off yesterday. So as you can see, we touched the upper ceiling, and which became our floor. Which was our floor, now it's our ceiling. We can pull back a little bit. So we'll have to kind of see if we get enough data that could help boost us back into that trading range we were kind of going in a sideways pattern there for a while. All right, folks, so rates are about the same where we left off yesterday. We did have a pricing for the worst yesterday, and again, due to the speculation of oil production yesterday. So we'll have to kind of wait and see where things go, but I think we'll get boosted back into that same trading range in the near term. All right, folks, have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.